Are Canadian employees taxed differently if working remotely for a US firm? Where tax law starts the analysis. From a Canadian tax perspective, the key questions are where the employee lives and where the work is physically performed, not who happens to sign the paycheck. A Canadian resident working remotely from their home in Canada for a US firm is usually taxed under the same Canadian rules as someone working for a Canadian employer. The fact that the employer is foreign does not magically move the income out of Canada. So no, the basic framework for how the employee is taxed is not different just because the firm is American. What changes is how easy or hard it is for the employer to comply with Canadian payroll obligations. Residency drives personal taxation. Canadian residents are generally taxed on their worldwide income. If they live in Canada and work there, their salary from a US firm is still Canadian employment income in the eyes of the tax authority. The employee reports it on a Canadian tax return, claims credits, and pays tax at the same rates as any other resident earning similar income. If the US firm is not withholding Canadian tax, the employee can end up making large installment payments or facing a big balance at filing time. That is a cash flow issue and a compliance annoyance, but it does not mean they are under a different tax regime. The rules are the same. The path to complying with them is messier. The role of payroll withholding. Where things feel different is payroll. When a Canadian employee works for a Canadian employer, income tax, CPP, and EI are normally withheld at source, and year-end slips are issued. When they work remotely for a US firm that has not registered for Canadian payroll, there may be no Canadian withholding, no CPP, no EI, and no T4. The employee still owes tax, but the machinery that usually supports them is missing. From the government's point of view, that is not ideal. Canada expects employers who are effectively operating as Canadian employers to withhold and remit. If the US firm registers and does that, the employee's experience looks much more like a standard Canadian job. If it refuses, the tax burden shifts to the employee to make installments and possibly face penalties if they misjudge the amounts. Social contributions and benefits. Social contributions are another point where employees feel the difference. A Canadian employee working for a local employer usually contributes to CPP and EI through payroll deductions, and the employer contributes as well. Those contributions build entitlement to certain benefits over time. When a remote worker is on pure US payroll with no Canadian CPP or EI contributions, they are often outside those systems. Depending on their history, that can affect their future benefits. Again, the tax rules do not change because the employer is foreign, but the actual contributions and entitlements can look different if the employer does not join the Canadian system. Impact of the tax treaty and US tax rules. The Canada-US tax treaty and US domestic law can affect whether the employee also has US tax obligations. In many cases, a Canadian resident remote employee working physically in Canada for a US firm will not owe US income tax on that salary, but every situation needs its own analysis, especially if the employee has other US connections. Even when the employee is not taxed by the US, the employer might issue US tax forms that do not align with Canadian reporting, which adds to the complexity. From the Canadian side, though, the core answer remains the same. The income is taxed in Canada as regular employment income. Any foreign reporting is layered on top of that, not a substitute for it. Permanent establishment and employer obligations. Whether the US firm has a permanent establishment in Canada is a separate question. A remote employee who just does routine work from home may not create a taxable presence for the employer, but one who actively builds business, negotiates contracts, or manages key operations might. If a permanent establishment exists, the company may have to file Canadian corporate tax returns and handle a more complex cross-border tax position. Even without a permanent establishment, the presence of a Canadian remote worker can still justify payroll registration and withholding. So from the employee's perspective, their tax treatment looks more normal if the employer accepts that role. From the employer's perspective, that step can feel like the beginning of a real Canadian footprint. Practical differences for the employee. In day-to-day life, a Canadian employee working remotely for a US firm may notice a few practical differences. They may not get T4 slips if the employer has not registered. They may have to do more work at tax time to calculate installments, track foreign reporting, and reconcile differences between US and Canadian forms. Their access to CPP, EI, and other social benefits may be thinner if contributions are not being made on their behalf. But the tax law itself is not treating them as some special category. They are still a Canadian resident earning employment income and filing a Canadian return under the same general rules as everyone else. Final thoughts? Canadian employees are not taxed under different rules just because they work remotely for a US firm. They are still taxed as Canadian residents on employment income earned in Canada. What changes is who handles the heavy lifting. When the foreign employer registers for Canadian payroll and does proper withholding, life looks similar to working for a local company. When it does not, the employee carries more of the compliance burden. If you are a US business building a remote Canadian team, understanding this distinction helps you make better decisions about payroll, structure, and long-term relationships with your staff. For more plain language guidance on this exact situation, you can visit www.theaccountingandtax.com. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.